How's it going, people? Welcome back to the channel. Financing a car can be something that can be a little bit stressful or quite difficult to work out how it works. It can be quite hard to work out whether financing is the right thing for you, and if you decide it is, what type of financing. So in this video I'm going to talk you through all the different types of car financing that you can do, including buying in cash, the pros and cons of each, and basically give you a quick rundown so that you feel a little bit better informed when it comes to buying your car. If you have an experience of financing a car, let me know in the comments down below what your experience was, what you went for, and how it worked out. Remember to like, comment, subscribe, all that great stuff. And without further ado, let's get into the video. Let's start by talking about cash. Buying a car in cash means buying a car either cash in hand or with a debit card. It's basically using the savings that you have accrued from your job or however you decide to make money, and just basically paying all of the money up front. Now, when buying a car well within your purchasing power, this can often be quite a good way of doing things, depending on what interest rates are looking like, and also depending on whether you need your savings for other things. So for example, let's say you have 10 grand in savings and you want to buy a car that's worth £1,000. It can often just makes sense to buy the £1,000 car, assuming that you haven't got to spend 10 grand on something else. It makes life easier, you own the car outright from day one, and ultimately if you get into any financial situations where you're struggling, you can sell the car. No one's going to take the car away from you, you don't owe anyone anything, the car is yours. Now that makes sense on our 10 grand to 1 grand kind of figure, but at the same time, what if your car is £30,000? Not a lot of people will have 30 grand sitting in the bank waiting to go on a car, and even if they do, they might not want to spend 30 grand on a car. Now this is when interest rates start to become very important. The interest rate of your savings accounts and also the interest rate of your finance deals. This is a good way of working out where you're going to end up spending more money. So let's go back to that £1,000 car. Let's say that your bank account has a 1.5% interest rate. That means that if you hadn't spent that £1,000 on the car, over the year, that £1,000 will have made you £15 in interest. If you instead borrowed that £1,000 on finance and paid a 9% per year interest rate on it, or something around about that region, that would have cost you an extra £90 on top of the £1,000. So minus the £15 that you would otherwise have made by having that £1,000 in the bank and not buying the car at all, and suddenly it's a £75 difference. So you're £75 better off by buying the car in cash than you are if you buy it on finance. And it's very easy to think about that in a £1,000 term because it's not that big a number compared to what you might spend on a car. Siri's been listening to me this whole time. But yes, if it was a £30,000 car, or a £50,000 car, or a £100,000 car, suddenly it's harder to spend the cash up front. And if you spend your money on a debit card or in cash, then you don't have consumer protection that you would otherwise have if you bought it on finance, because the finance companies have a duty to protect you, or if you bought it on a credit card, and similarly your purchase is protected. Now so far I've only ever bought in cash because I've only ever bought cheap cars, so for me it's not been that big a deal. I haven't had to go for a big finance deal, but in the future I probably will have to finance a car at some point, because if I want to get into a super nice car, then how am I going to do it in cash? And if I had the cash to buy one of those cars up front, then I'd probably be looking more at putting that into a house deposit or something like that. And just because I'm putting the money into a house deposit doesn't necessarily mean that I can't afford to own the car as well. It's just that I can't afford to buy it in cash up front. And now that is where finance comes in. So let me quickly run you through the different types of finance. Now the simplest form of car finance is probably hire purchase. This is where you pay a deposit on the car, so let's say like 10%, which is kind of the norm, and then you pay the rest of the car off with interest over a fixed period. Now you can often get these from car dealers, manufacturers, or brokers, and rates are generally better for newer cars because companies ultimately want you to buy their new stock. What you really do need to know though is that the loan is secured against the car. Now what that means is that ultimately if you fail to make payments on the car, it can be repossessed. And that is because the car doesn't belong to you until the end of the term. Obviously it's not as simple as they can just take the car back from you. There are some consumer rights related to this. Once you've paid half of the car, I think you can actually in many cases return the car and not make any more payments. That depends on your terms and conditions though, so worth checking. And another one as well is that once you paid about a third of the car, I don't think they can repossess your car without a court order. And also, as as the consumer in this case, if the car goes wrong, it's the finance company's problem in many cases. Now that's a nice simple way of going about financing a car. It kind of feels like a mortgage or something like that. Let's go on to PCP or personal contract purchase instead, and I'll explain how that works. And this is sort of similar to hire purchasing a car, but it's slightly more complicated. Again, you'll likely pay a deposit and then you'll pay monthlies, and then at the end of the period there are a bunch of different options of what to do next. You can choose to return the car back to the lender, so you just literally let it go there and then. You can pay what's often referred to as a balloon payment at the end, which is generally the resale value of the car at that point in time, or you can use that resale value of the car towards buying a new car and then basically just PCP your way into something else. Now generally monthly it's cheaper to go for a PCP deal because ultimately you're paying the interest rather than paying for the car, is the way that it feels like. It's like getting an interest only mortgage. You're not actually paying for the value of the car month on month in the way that you are in a hire purchase agreement where you're literally just paying back the car. It's actually at the end of the agreement when you know that you're going to pay off that big lump sum. I'll overlay an example here of what it might look like. As you can see, £30,000 with a £3,000 deposit with a repayment term of 3 years. On the hire purchase, that's £801 monthly repayments versus the PCP, which is £460, which obviously a lot more stomachable. However, if you look at the total repayments on the hire purchase, you're paying back £28,836 on a £27,000 finance amount versus £29,967 on the PCP. And that value is obviously including that big lump sum at the bottom there, £13,867, which you'll pay upfront in one go. Now, as you might expect, that means that PCP can be particularly useful for people who might not have the money right now, want to have lower monthly payments over time, and think that in that time they could either save the money to pay off that lump sum, or they don't think they're going to actually keep the car when they reach the end of that term. I would highly recommend not going for PCP though if you're thinking about keeping your car long term and you're just going for this one because of the lower monthly payments. Ultimately, you're going to have to pay that big payment at some point or another, and you're going to be paying more overall. So yes, good idea if you think you can save it. If you don't think you can save that extra money to pay off that bill at the end, then maybe not the right choice for you. But if you were never planning on buying the car at the end of the PCP deal anyway, it might have been worth going for a personal contract hire or a PCH instead. When people talk about leasing cars, this is often one of the main things they're talking about. Rather than paying a deposit on the car, instead you might pay 3 months of the lease amount up front, and then you start to pay your monthly lease amounts further down the line. Kind of like renting a house. You're not buying the house, none of your money is going towards owning the house, it's just allowing you to use the car for the period of the contract. Generally, a PCH will have a mileage agreement as well, so maybe they say you can do 10,000 miles a year or something on the car. It's worth not going over that, because if you do, then you might incur additional charges at the end of your term. Similarly, you should keep the car in good condition, because if anything goes wrong with the car, then ultimately it would be more charges for you. And assuming that you've stayed within that mileage agreement and you haven't damaged the car in any way that's not covered in your terms and conditions, at the end of the agreement, you just give the car back and it's no longer your problem. Now, this is generally a lot cheaper, obviously, than buying a car in and of itself, just like renting generally isn't as expensive as buying a house. And that's mostly because if you're renting, you're probably not paying 25 years worth of rent, which would otherwise maybe pay off your mortgage. And so similarly with a car, you're not buying it, you're just renting it, and you're kind of maybe also accounting for depreciation to some degree as well. And those points I made around mileage and damage, it's important to remember that if you plan on giving your car back at the end of a PCP term, those can also apply in that case as well. So those are generally some of the key ways that people buy their cars in cash, and by those 3 other means that I mentioned. But what if you wanted to buy it in a different way? There are other ways to get a hold of a car as well. One particularly interesting way is to get either a bank loan or pay for a car on a credit card. Now, getting a bank loan might feel to some degree like a hire purchase agreement, just without the consumer protection, and often with slightly lower interest rates. Now, I have friends that have used both of these ways of buying cars, and it's been very helpful for both. A friend of mine managed to pay 0% interest on an £8,000 car by getting a really good credit card deal where it was a 0% interest rate for the first year. That meant that he could buy the car up front on his credit card for £8,000, and then over the space of a whole year pay back that £8,000 without ever having to pay any money over on interest. The benefit of that was that he owned the car from day one. The car was his ultimately. There was no loan backed by the car. It gave him a bit longer to pay, as does finance, but ultimately ultimately he was paying only £8,000. There was no interest on top. Now, another good friend of mine bought a car for £12,000, which he took out a bank loan for. Now, in this case as well, he owned the car from day one. The car was immediately his. If anything went wrong, he could sell the car and use that to pay off part of the bank loan as well. And the interest rates were much lower than what he was offered from finance companies at the time, so it made sense to go for that kind of route. Now, the key things about both of those options, as well as all of the previous finance options I've mentioned, is credit worthiness, or having a good credit score. Now, credit score or rating comes from buying stuff on credit over an extended period of time and building up basically trust. The people that lend you money have more faith in you, so they're willing to give you better rates. Now, not only can having a good credit rating get you a car with cheaper rates, also, by buying a car on finance, you can generally increase your credit rating if you pay everything off in time. So those are most of your options. There are obviously other ones as well, but those are most of the options when it comes to financing a car. What would I recommend? It really depends on your situation. I've always bought cars in cash, as I've said, because it has been cheap enough for me to buy them in cash. In future, I'll probably still buy my next car in cash as well. But when it comes to my first sports car or something that costs upwards of 30 grand, etc., I probably won't have the money to buy it in cash unless you guys hit the like button and subscribe and do all that good stuff so that I can get more wealth from YouTube and buy nice cars. But yes, in those situations, I will probably have to finance to some degree. And so the good thing for me to do now would be to build up my credit rating so that when it comes to that situation, I can have the best options and the best rates. My main recommendation is that whatever way you go about purchasing your car, don't make a rash decision, read the terms and conditions, and don't let anyone pressure you into making a purchase. If something looks like it might be a bad financial decision, if you're looking at it and you've got that little feeling inside that makes you think, oh, I'm not sure, I might be stretching, don't do it. Don't stretch. So I know a lot of people have been asking me for finance videos, so I hope this was helpful in terms of just giving you a basic rundown. I'll try and do some actual finance videos in future, showing you guys the kinds of deals that you can get on cars with finance if you're interested. But anyway, a massive thank you to the patrons. As always, remember to like, comment, subscribe, all that great stuff, and thank you very much for watching. I'll see you in the next one. Listen.